Hey, this is Jackson Alpha Charts with a state of the market video. Today is November 26, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, happy Thanksgiving, everybody. Appreciate you watching today. If you haven't done so yet, like and subscribe to the video. Please subscribe to my channel. It really does help me out. Again, you can find me at Twitter at AlphaCharts365. And this week, I run a super follow group on Twitter. And this week, I will be giving a free view for everybody of all my super follow tweets and everything, just to give you an idea of kind of what we do out there. So again, follow me on Twitter at AlphaCharts365. All my tweets that will be normally for super follows only, I'll make sure I put super follow on top of it, so you just kind of have an idea of what content would be normally sent out and what would be super follow only content. Okay, let's get into these markets. So SPX, again, it was extremely late volume because it was Thanksgiving week here in America, and a lot of people were on vacations. Closed on Thursday, half day on Friday, so don't let the volume throw you off, as it was much lighter. Overall, though, good week, up 1.53%. SPX still has a declining 200-day moving average, which is literally right there, right? Price is right there. This downtrend line to contend with, and even this area of horizontal potential supply demand zone. So a lot of pieces that price is now coming into. So it's gonna be really interesting going into the end of the year. How do we interact with all these pieces, and what does price do, right? Let's go to the RSP though and take a look at that. So RSP, very, very similar, but price is above the 200-day. Price is actually getting above this green zone. You know, the green zone is what I drew in, so I could actually make it bigger if I needed to, right? I could go to here and say it's in the green zone. And there's your downtrend line, right? So equal weighted SPX is looking way, way, way better than the cap weighted. Just the way it goes. And let me see if I could bring this in here. I think hopefully you guys can see this. As you see, just by this sheer size on this FinViz heat map, you see Apple, Microsoft, Google, Amazon, Tesla, Meta. Those things are the big boys, and that's what's weighing down the cap weighted index. I just want to kind of show you that real fast. But point being is that RSP outperforming SPX, as denoted because it's above the 200-day in the green zone already, and now kind of interacting with this downtrend line. We'll see what happens once it gets into this 148, 149 area, and see what price does there. But super constructive looking on the equal weighted, which makes me think that under the surface things are better than what the cap weighted, which is what most people are looking at, are talking about. Looking at the Qs remain the weakest of all of the indexes by far. There's your downtrend line, horizontal area, and actually there's two of them in my opinion. You have this one and you have that one. Below both of them, declining 200-day, price not even close to it. So there's a lot of issues there. So this 300 level, we've talked about this. If you've watched these videos, we've talked about this 300 level for now, what, a year and a half, right? We've talked about it from when it was back here, right, in 2020. And it remains to be an important level. So I think Q's 300-ish, right, 295 to 300, that's the level. And then we'll have this downtrend line would be in play, and also this declining 200-day moving average would probably be in play as well. And we'll see what happens if and when it gets there, right? Well, eventually it'll get there. We just don't know when. Okay, on the equal weighted, right? We talked about all these topping patterns that were showing up, and they showed out, right? Equal weighted Qs, though, there's your 200-day, and price is obviously much closer. And then there's your overhead supply right there. And we're going to find out real soon if under the surface things are much better. They're looking better, right? They're looking way better. But I want to see price above this 200-day. That is, to me, that's healing. Nice to see a flat 50-day. That's something, right? On the regular Qs, it's still kind of declining, where on the equated, it's flat. There's a big difference right there, right? Big difference. It shows you how much stronger under the surface things are, even in the weakest of the indexes. Okay. Let's look at mid caps next. Looking at mid caps, very, very strong, right? So you have a flattening 200-day, you have a rising 50-day, and you're in, again, the turbulence zone, right? You're in this supply area. Again, nice little double bottom look to it, right? It's got to obviously break out and probably get above 477-ish, right? 480-ish, something like that, for it to be a true double bottom, but constructive look to it. That's what we can say, right? It's a constructive look as long as it stays above this, 450 area, which is where the 200-day is. You're getting a bullish crossovers. Again, it may chop around here. Doesn't mean it's going straight up, right? But again, very, very constructive. Also got to mention Dow Jones Industrial, very, very constructive as well, with a flattening 200-day price well above it. Very well defined double bottom. Again, very, very bullish. Those are your two strongest charts, right? Your mid caps and your Dow Jones Industrial Average chart. Looking at IWM, right? So we've been talking, is this a head and shoulders topping pattern, or is this a double bottom, right? We don't know the answer to that. But look, price did close, even though on tiny volume, price did close above the 200-day, just barely, which is super constructive. So again, it did it here, failed, but now it came back pretty quickly, held the 23-day and did it again. 50-day is flat, 200-day is flattening. So I'm pretty constructive on this. Now, again, it needs to get above 191-ish, 192 for me to take off these head and shoulder top potential over here. But as of right now, it's just potential. It's not like, I'm not calling this. I said it could be a double bottom. One man's right double bottom is another man's head and shoulders top. We've talked about that before, and this is now a choppy, bottomy looking. Again, I want to see price above 191, 192, and I think that this would be extremely constructive. And go back with the mid caps and Dow Jones Industrial above the 200-day, flattening 200-day, and so on and so forth in the constructive column. And then at the small cap growth, IWO price again is right there. Looks very, very similar, just under the 200-day, and again flattening to 50-day. Everything looks very constructive on the IWO growth front as well. So as far as the indexes go, we're seeing very constructive action with Dow Jones mid caps looking great. Small caps are catching up, right? They're starting to really look much better. And then you have the SPX, which is constructive, especially when you look at the equal weighted and the Qs being the weakest. But again, the equal weight is looking better. So overall, indexes are not bad, right? Well, let's go ahead and look at the specific ETFs. Okay, let's look at first financials. And there's your double bottom, and you see financials breaking out. That bodes very, very well, I think, for the market. And again, this confirms, I think, a double bottom as long as we stay above, $35, $36, something like that. Strong looking chart. No reason to believe that this is going to roll over at this point. Obviously anything can happen. And let's just see how far back 200 days is. 47, 200 days is back here, February 9th, right? So as this price over the next couple of weeks gets taken out, this 200-day will start to flatten out, right? So that's going to be, nice to see, especially as the 50-day makes its way north. And again, overall, XLF looking really, really good. Let's look at SMH, my favorite to look at. All right, so maybe double bottom-ish. I'm going to take out this for now, clean it up a little bit. You got this downtrend line. There's your 200-day that's declining. Price is right below it, for the most part, just a few percentage points below it. And we'll see what happens. But again, this side looks very, very strong on the chart. So I would call this participating. February 9th. So yeah, so this is where the 200 would be, right over here. And as we take out these over the next few weeks, if price can get above it, we have, again, some overhead supply to deal with, but overall this is looking pretty good. And maybe there's sort of some type of bottoming formation in SMH again. So we stopped going down, right? That's the positive to get from SMH, right? XLF is looking stronger. SMH, semiconductors, we stopped going down. We're starting to get, again, that constructive look, right? Let's look at transports. I like the equal weighted, right? If I can, I like equal weighted, and I can. So here we go, XTN. Again, trying to do that, again, that kind of double bottomish look, right? I'll just get this out of here. Too many lines sometimes. Some kind of the double bottomish look, trying to go higher. Flat 50-day. You still have the declining 200 because we got to get rid of some of this old data over the next few weeks. But if price can get back up to this $80, right, and then break out above 82, right, transports would look pretty good. Overall, improving, constructive, healing. That's kind of how I look at the transports. It's very similar to SMH. And let's look at home builders. Again, clean up some of these old arrows. Home builders above the 200-day, looking actually pretty strong overall. And looking here, February. Yeah, I mean, so as we clean up this data and price decides to start to break out, we have a flat to rising 50-day. The 200-day will start to flatten out over the next few weeks, and price is above it. Right now, it's not breaking out. It's not leading like the financials are leading, but it's still looking pretty good. So again, it's in that constructive sector. So maybe, before we even get to the recession, the health of the economy is starting to get better. Now, can it fall apart? Obviously, yes. The answer is yes, it could. But as of right now, it looks like things are healing. So whether this was a stealth recession or whatever you want to call it, it's under the surface, things are starting to look better. All right, so let's go ahead and take a look at the internals now. What are the internals telling us that maybe we're not seeing in the indexes, or we're not seeing in the key sectors and subsectors? Okay, let's look at the VIX first. So if things were falling apart, you think the VIX would be spiking, and we're seeing just the opposite. The VIX is declining. That bodes well for a trending bull market type atmosphere. Looks fantastic. Looking at credit spreads, again, if things were about to get destroyed, you would get credit spreads would be popping off and moving higher, and we're not seeing that. If anything, we're seeing some tightening, or even maybe we'll call it consolidation, maybe a toppy look to it. We don't know yet. This trend line may be important. We won't know that till after the fact. Right now, it has been a few times, right? Here, and now here. Now, if it falls below that, that'd be good information. But overall, credit spreads not popping off, so that looks really, really good. Let's just look at the interest rates real fast. TNX. You know what? TNX is declining. I'll move myself down here so I can see better. At 3.7, right? We were up at 4.25. Now we're down to 3.7. Interest rates, the 10-year yield is coming in. Again, that's a very positive, that bodes well for the stock market, right? That you want to know what, double top right there. You want to know why things are looking better? Interest rates are coming in. What else is coming in? The dollar is coming in, right? Look at this. It topped out here, 114. Lower highs, lower lows, and we're coming back down. Maybe it comes down to 104, right? And then we'll see what happens, right? Then we don't know, but this dollar coming in, interest rates coming in, got to be a positive, right? Looking at the put call ratio, again, people are in the middle, right? This is this type of half are bulls, half are bears. That bodes well for the market, right? That type of market's going to grind up the wall of worry, and this is the wall of worry, right? This is it's not extreme, so there's no signal, but this tells you that the wall of worry is strong. And then let's look at breadth. MMFI, percent of stocks above the 50-day. And again, strong off the bottom, 70% now are above the 50-day moving average. That's really, really strong. And even when we look above the 200-day moving average, we have 45%, almost 46% above there. So again, things are healing, right? We were down to 15% over here, and in the 50-day, we were down to roughly 10%, right? So things are healing. That's the most important thing to consider. And just looking at the Bitcoin chart, again, we had this FTX drama that was going on here, and is this a bear flag? Is this not a bear flag? I don't know. Bitcoin is now, honestly, it's becoming so small as far as market cap goes. I'm not sure if it's worth even looking at this point, but we'll see. Good chance 13,000 is still in play at some level, but we won't know that till after the fact. All right. So overall, my take on the markets is things are healing, things are getting better. Get into the strongest sectors, the strongest names within those sectors. Not everything is going up at the same rate. So you got to be in the best of the breed, the best of the best. So tomorrow, I'm going to make my stocks to watch video, and I'm only producing one. I usually produce two, one for my super files and one for everyone else. But tomorrow, I'm producing just one video, just a super file video, to kind of give you an idea of what goes on. So basically what my super follow video stocks to watch is, it's a more concentrated look, and then the everything look. And so it's a combined of two different things. So usually I give the everything look to everybody, but the concentrated look I give just the super follows. So tomorrow you will get everything. Find me on Twitter at AlphaCharts365. Check out the video tomorrow. Like and subscribe to my channel, please. It does help me. And tweet and retweet this video. What the hell, right? Thank you all very much. Hope you all have a great day. Bye.